So you really want to understand your market and understand what the cap rate of your market is, because that plays a major role in how you run your deal analysis. Let's get started and talk about all the different markets so you have a better idea. When I'm talking about primary, secondary, tertiary markets, what am I meaning? Okay. So this is what it's going to look like. And so let's just say that we're talking about like Nashville. Okay. So this is Nashville. And inside Nashville, you're going to have your primary market. Primary market is where this is the primary. And primary market is when you're gonna like, most people live in primary markets, let's say. And this, when you search on Google Maps and you search storage near me, what comes up? Is there a lot of like Cube Smarts and extra space storages and all these bigger players, Public Storage, U-Haul, this kind of stuff. Okay. So those are all primary market players. And then there's also there's also other primary market players, like let's say Monster or Life Storage or Compass. And so those you're going to kind of see, those are bigger players. And a lot of times in these primary markets, like bigger primary markets, they're going to be like maybe double story or tri-story storage facilities, nicer facilities and stuff like this. In the center of Nashville, this is what you're going to see. All right, that's the competition. Now, in a primary market, your cap rate, right? Your cap rate is your NOI divided by your purchase price. But the cap rate is really kind of like in the commercial world, cap rate is just this number that really describes where your market stands in terms of what the purchasing power is in that market, right? And really a lower cap rate is supposedly less risky, and then a higher cap rate is more risky. Okay. I don't really agree with that, but that's what everybody says in the industry. Okay. So in the primary market, you're going to typically be 4 to 6%. Now let's just compare, let's compare Nashville, Tennessee to Savannah, Georgia. Okay. Nashville, Tennessee to Savannah, Georgia. So Nashville, Tennessee, we know is just like this big metropolitan area. And there's this huge primary market. And then there's all these suburbs around, like Murfreesboro and all these other suburbs around Nashville. Okay. If you are living, let's say in Murfreesboro or like one of these other suburbs around Nashville, and you're searching and you're still finding all these bigger players and all these bigger storage facilities, you are still in a primary market. Okay. Now let's talk about Savannah, Georgia. Now, obviously, Savannah, Georgia is, it's not a big town, but it's like 200-300 people, so it's kind of a bigger city, right? And inside Savannah, when you're in the downtown area of Savannah, you're going to find bigger players as storage facilities there. But the truth is that primary market is like kind of small, right, compared to the Nashville primary market, right? Nashville primary market is going to expand out to all the suburbs. Whereas like a primary market in Savannah would be just like, maybe in just the town of Savannah itself, and then outside would be considered secondary market. Okay, so you got to really pay attention to what areas you're looking at, when you start looking for deals. Now, secondary market. Secondary markets are typically 6 to 7% cap rates. When I put the percentage, that's the cap rate. But a secondary market is going to be there's two different types of secondary markets. One of them is going to be maybe the suburbs of a primary market. For instance, like Savannah. Savannah's suburbs, like Pooler or whatever, those areas would be considered a lot of times secondary markets. You may have some bigger players there, like as in like maybe Monster or like, some some smaller, bigger players there, but you're not going to have like, lots of REITs there, okay, in these secondary markets. So for instance, I live in Tallahassee, and like inside Tallahassee is a town of maybe like between 200,000 and 300,000 people, depending on the school year, right? So it's really the same size as Savannah. And we have a lot of storage in this area, and it would be considered a secondary market. But like there's only like I think one extra space and 2 CubeSmarts or something like this, right? But then there's King Storage, and King Storage is like a secondary market kind of bigger player, and they have like really big facilities, but they're like, in like it would be in Savannah or in Tallahassee, what I'm saying? If you have these like secondary market bigger players that are not like REITs, okay? And so, and then you have in secondary markets, you can, a lot of times you're going to have just standalone cities. So, like Tallahassee is a standalone city, doesn't really have a lot of suburbs. Tallahassee is just a big city and everybody lives in Tallahassee. Savannah is just a city and everybody kind of lives in Savannah. There's not a lot of suburbs like around that town. You think about in the state that you're living, what states are considered secondary markets that are not suburbs of primary markets, okay? So for us little people, we should be focusing on secondary market or tertiary market facilities. So, I'm going to put here tertiary market, and tertiary markets are typically going to be, let's do 7 to 8%. Or 7 plus, right? But we're not seeing a lot of like high cap rates. And back in the day when I started, you used to see a lot of high cap rates, but like now you're seeing like 7 to 8 is a good, 7 plus is a good tertiary market cap rate. Now you can get the cap rate higher when you when you manage it properly, but when you're buying, typically you're going to be running your numbers depending on your market. Because when you get the deal analyzer, if you decide to purchase the deal analyzer, either my deal analyzer or whatever, however you're running your numbers, you're going to want to know what is the market cap rate. And the market cap rate is based on the area that you're looking for your facility. So if you're looking at a primary market, you can't run a cap rate at 8%. If you're looking at a tertiary market, you don't want to be running your numbers at 4%, right? So you really want to understand your market and understand what the cap rate of your market is, because that plays a major role in how you run your deal analysis.